War is escalating, markets are shaking, and the massive question right now is it time to sell everything or buy more ASX stocks? We answer all that and give you some amazing stocks for your watch list in these volatile times, as the brains trust behind Australia's leading government-accredited share trading education and market insight that is regularly called upon by major media outlets. We'll show you the professional stock market playbook that actually works. I'm Philip Tortevsky, joined by Chief Analyst Dale Gillam and Senior Analyst Janine Cox, and we are Wealth Within. Good evening, Janine.
Good evening. How are you?
Good in exciting, I shouldn't say exciting, I should say really volatile times. I mean, markets are tipping and we're going to cover all of that and dive into some of the most important questions right now. We do have Dale also joining via correspondence. Dale, welcome.
How you doing, guys?
Yeah, pretty good, pretty good. Let's get straight into this because, as mentioned, we are in some really interesting times. Now, war is escalating, as mentioned, in the Middle East. Markets are turning down, and I want to get your thoughts here, Dale, first. Are we seeing, I guess, the precursor to a market crash here, or is now not the time to panic and sell your stocks? I know this is a question most investors have on their mind right now.
Yeah, it's a common question that you see all the time, and to sort of not downplay what's happening at the moment around the world. Obviously, with what's happening in Iraq, is the world's always in some sort of war, it seems. And so whilst it's bad, and a lot of people do panic with the market thinking it's going to crash the stock market. It's not going to crash the stock market. It's going to create a little bit of short-term volatility that we're seeing right now. But to me, in the long-term or medium-term movement of the stock market, it will do what it's going to do. And wars tend to be good for the stock market. We generally see a lot more things happening and the stock market rising during wars. So whilst it's sort of good for the stock market, it's not a good thing to be in that war situation. But as I said a second ago, we've always had wars around the Middle East and all sorts of other areas of the world. This is just, as I said, creating a little bit of more emotion than we probably need right now.
Yeah, now stick around. We're going to get into some amazing stocks, but also look at those stocks you're probably thinking about whether it's time to sell. So stay tuned for that. But I want to continue this thread here for potential buys in the market. What are the main points to consider to navigate this market as the volatility is likely to increase? I know that is probably the most important question here. Janine, what are your thoughts?
Yeah, look, I guess I would first defer to what I'm hearing from people. And the problem is that people are focusing on all the panic that's going on around the world instead of actually looking at what the chart's saying. And I think that's the first thing, is to look at the chart, and we will get in and have a look at what the All Ords is doing shortly. However, the other side to it is to make sure that they've got good rules. It doesn't matter whether there's war going on and there are nice pullbacks in some sectors to provide opportunities and some sectors are running on. You've got to be able to then make the judgment as to which area you're going to invest more heavily into. And there's some really good opportunities which we're going to talk about on the show further as we get into it. Yeah,
and I mean, just quickly on that, because you mentioned in terms of getting into the right areas of the market, are there any in particular? Obviously now oil is something everyone's talking about, but is that at risk of one of those, I guess, FOMO type opportunities? Because the reality is if things fix in the next week, maybe that opportunity is gone. Are you looking at it from that angle? Is it time to be much more active right now if you are going to be picky, or not really?
Well, I can't see it fixing in a week. That's the bottom line. However, it could, Trump and some of the world leaders have been very good at resolving some of the issues, but not all, and creating others, but we won't go too far into that. However, I just think that people have to play it by ear, because it always happens near market tops. If you go back near the 60s, around the time in the late 60s and then into early 70s, the market went up and it pulled back, and it continued to go up and then pulled back to eventually fall over. So as Dale said earlier, the timing of that next major pullback, we are going to see one. It's just a question of when now, and we're just continuing to closely watch the chart and monitor the situation so that we can inform people on what they need to be doing.
Yeah, great stuff. All right, let's quell some of those fears right now and take a look at what that All Ords index is doing right now. And then, as mentioned, we're going to dive into some of Australia's favourite stocks to see if now really is the time to sell, and also give you a few that are shaping up for really nice runs on the way up in this environment. So, Janine, the All Ords.
Yes, with pleasure. Let's have a look at this rise that we've seen on the All Ords, although it's interesting to see that our market is only really just coming back to the peak prior to that pullback that we saw in 2025. So this is the pullback in November 2025. Of course, this was the Trump tariffs. We're not too much further up above where we were during the Trump tariffs. Let's just have a look from a percentage point first of all. So it's only about a 6% gain in all that time, which is okay for our market. Did we expect it to be doing more at this time? Yes. The Trump tariffs definitely slowed things down and created higher volatility in the short term, and then the likelihood of more consolidation. But just we have to come back to what's driving our market, and it's big miners are driving it at the moment. We've seen banks going higher, but they will eventually peak out. So, you know, you've got to be thinking that although the market looks like it's just broken out and could continue to run, and we've got some targets overhead for the market, it could go between 10 and 11,000 in the next run. The banks may actually run out of steam first, and so that therefore the miners are probably not going to drive it for too much longer before they then have a pullback as well.
Yeah, it's really important how you're breaking that down, and I want to get your thoughts on this, Dale, before we move on to some stocks, looking at the All Ords. But I've had so many conversations, even in the last week, with, you know, as you know, students coming to us talking about what is most important when I'm looking to identify stocks, and there's been this, I guess, thinking that I need to be, you know, sector specific, looking at certain sectors that are hot at the moment. But I want to get your thoughts on this because, you know, as you know, and Janine, you're there too, some of the best opportunities are often where no one's looking. And so give us an insight, though, of whether this market is truly right now about being sector specific or more so stock specific to find those right opportunities.
Look, I think it's not necessarily sector specific. It is very much stock specific. I mean, at the end of the day, we don't buy the whole sector. We don't buy the whole market. We just buy stocks and we sell stocks. And this is what I find a lot of people do is they overcomplicate the process. I mean, my mum always used to say to me, she said, Dale, doesn't matter what happens, it's how you handle it. And imagine, you know, going to the MCG on grand final day and worrying about everything that's happening at the MCG. All I need to do is find my seat. That's it. Yeah, and what are the directions to figuring out where my seat is and narrowing it down to where that is. So, you know, you look at the bay numbers, the gate numbers and everything else, the row numbers, and then you finally get down to, here's the seat that I want to watch the grand final. And I find in times like these, people look at everything in the world that's going on and try and make decisions about their portfolio. And you don't need to make it that complex. It is really just as simple as having some simple rules to buy and sell. And, you know, once you've got that with your money management, then finding the right stocks is not that hard. And whilst, you know, Janine did allude to two of the sectors, the material sector we love, banking is still going up, or financial services sectors still going up. But I don't necessarily think, or reading between the lines of what Janine said, I don't think it's going to be one of those, you know, breakneck speeds out of the financial services sector, and it will slow down. But just bring everything back. Don't go big global. Come down into what you can do, or what you can do for your portfolio today, and don't be too worried about different sectors, etc. Just worry about making sure you've got good stocks in your portfolio and rules around that.
Yeah, fantastic. Now, on that point, if you do want to find good stocks, you want to know how to structure your portfolio the right way, please check this book out, How to Beat the Managed Funds by 20%. It's from Dale Gillham. It is free. You just have to pay the shipping. The link is in the description in this video. Please go and check that out. Now, as I always say, if you want to take things to the next level and professionally, go and check out the website. Look at our trading courses under the Educations tab, the Diploma of Share Trading and Investment. It is government accredited. And go check those testimonials out because our clients are doing amazing things right now. Now, let's get to our first stock, Janine, EOS.
I thought it would be interesting to have a look at that because we've had over time a lot of people write in about this one, and we know that you love it, and some of our students have made some really good money on this one, and they're just saying, well, when is this one going to be another opportunity again?
Well, that's the show today. Is it time to buy or time to sell?
Well,
so,
exactly.
yeah, for sure.
But looking at where it's gone through, it went through its all-time high. This is just in recent months. So we saw back in January 2026, it managed to break through that high. And there was a bit of a sell-off, so some profit taking there, but it's recovered really nicely, and I think that's a really good test of the market telling you that, okay, there's still a lot of interest in this stock. So now it's about using stealth, and if I can use that word in this, whether that's inappropriate or not, you're going to tell me. We're using stealth here because we're watching the stock then to test and see how it recovers from this move. Is it going to pull back a bit more? Is it going to come back to about $8 and then turn around and go roaring through that high? And that's really what's you've got to watch for right now. Even if stocks have pulled back, maybe you're holding some that have fallen away and you're just waiting to see whether they recover a bit. It's that retest of the recovery. The important thing too is with these more volatile stocks is not to get caught out, Phil, with, if it does pull back and then people continue to hold it, so where do you sell is the other side to it. But I think there are a lot of people sitting on the sidelines now saying, well, okay, tell us when is a really good time. And I would say let it just go sideways or hover around there and let it prove itself once it goes back through that resistance.
Yeah, so you're saying a move up above that 10.50, that's when the next opportunity comes.
Yeah, exactly.
All right. Dale, did you want to get into the next stock? I believe it's ANZ. Now, this one, obviously, a lot of investors are holding in their portfolios. And like we mentioned earlier, asking that question, do I sell the banks now? Are you seeing any of that on ANZ or maybe a buying opportunity?
I'm not seeing that on most of the banks, actually, and I think there's some opportunities in some of the second-tier banks, like your Bendigo Adelaide banks. I'd be looking for that, for a little bit more value in those. But banks are always going to be performers. They are not quite as volatile as other stocks in the marketplace. But when you're looking at banks, CommBank, it came back over several months and it's taken off over the last few weeks. So I still think the banks are good. And I still think now's the time to buy. Now's not the time to panic. And as Buffett says, buying doom, selling boom. And right now with the world news at the moment, people are a little bit scared, which means they're looking the other way or they're selling. And it could be a good time to get in and buy into some really great stocks. I had a look at the top 100 earlier today and I went, wow, I think I'm going to run out of money before I run out of stocks to buy. But let's go into ANZ and have a good look at the stock. And as you can see on the left is the monthly chart, on the right is the weekly chart. This is a bullish stock, not even a question about it. It's quite bullish. And if we go right back through its history, right back to 1984, you can see it just continually makes new all-time highs. And it's just come off last month. February's high is $41. It's just having a little bit of a breather at the moment so far. We've only had yesterday's data in this, so it's almost nothing. It's come off a little bit with the news, but that's a very, very strong bar in February, showing there's a lot of people looking at this stock and wanting to buy it. But let's go to the weekly chart. If you wanted to buy this stock, and I'm going to put into a bit of a broader basket all of the big banks and some of the other second-tier banks, you could probably buy these stocks and hold them for the next 12 months and do quite well. But you can see the last few weeks it's come off a little bit here. Currently, this is this week. But even that, yesterday it sort of started here, dropped away and came right back. So it'll be interesting to see where it does end up at the end of this week. But above $41, nice little buy signal there, because obviously at the moment it's going down. But if I hold support, I don't have a problem with this one. And again, it just depends on what your goal is. If you're more of a trader, it might be some short-term opportunities. But if you're more of an investor, then it could be a nice little trade in this stock for 6 months to 18 months, depending on how the market unfolds. But we can only do our best guess at any one time, can't we?
Yeah, exactly. That's the point. Get those nice risk-reward setups in place, and that's only done by looking at the chart. I mean, I am divesting a little bit. It was interesting. I had a conversation or a comment on one of the YouTube videos. I think it's important to cover it at this moment. It was, why it was a gentleman that said, I look at the fundamentals of a company and I, look at if the company's doing well, and I use those metrics. I don't really understand why you look at charts. And I said, well, for the simple reason that this could also be true, this reality is that you could find a really nice, good company that's fantastic fundamentally and still lose money trading because you bought at the wrong time. And that's why, looking at charts is that ultimate confirmer, getting you in at the optimal time. And if you're good to buy a great company, then the price should do what, appreciate over time. But it allows you that optimal opportunity to maximize profit. I think That's so important. Even buying a crap company, you can still make money out of it if you know how to monitor price, right?
Exactly, and I think the next stock is probably a really good example of that. If we go to Drone Shield, which is one of your favourites, you recommended that a number of times.
It's just happened that way. I recommended it once and it flew, and now all of a sudden it's Phil and Drone Shield, but that's all right. There might be another one.
Well, look, I mean, it's found support where you thought it would, just around this $3 mark.
Yep.
So this is one that is not for the faint-hearted, obviously, and you've got to have a really good strategy to be able to get out. Because, I mean, if we just take this as an example of what the stock could do, and at different times it's going to pull back more than others. I mean, I know we've showed you on the show the sort of pullbacks that can happen on some stocks, and they can be pretty consistent. We've seen that that's the case here. But eventually, what our students know is that the patterns that unfold will tell you that next time it's not necessarily going to do that, because it will repeat it for a certain amount of time, and then the broader picture or the broader pattern that's unfolding will take over, and it changes. So therefore, and so some people think, oh, this is easy, I can do this. I just put a percentage tool on there and I can see that's fallen by 75 and this one's 75, and then they wait for the next one and think, okay, it's going to fall by 75 as well, but it only falls by around 60%. Why is that? You know, and until you study with us, then you don't understand why those falls of those degree occur. Now, just looking back at Drone Shield, we can see there this pullback at around that $3 mark. It's starting to recover from that. Well, we can see that if that level holds and it takes off and it heads back through this high, there's still heaps of upside to the all-time high. So, you know, I'm quietly excited about that next move. There's 40% upside to that high. If we see that run happen, then it could even take out that high next time.
Yeah, I mean, does that 430, 440 level, and I'm sure you're looking at it as well, give you a bit of, and I know why you said for it to run above that. Is that the moment where you're thinking, okay, this is what I'm looking for specifically? Because how many people that you see immediately look at a stock like Drone Shield, it's pulled back, and I just had this conversation the other day actually, is Drone Shield pull back? Someone said, I'm looking to buy. And it's okay, so where are you thinking of, where's your risk reward, where's your expectation? Oh, it's going to blow past the all-time high. So what makes you so confident of that when you've got resistance staring right at you know, in front of you?
Exactly.
And so these are the things, if you're not looking...
That resistance actually helps you.
Yeah.
So this is what people don't realise. So you can, obviously, as a short-term trader, you could trade up to that point, but once it goes through it, it could be a whole different ball game in terms of the length of that rise for you. So just to have a look back at the chart for 1 minute, what Phil was talking about. So we're seeing that there was a lot of, and I'll expand this up, you can see a lot of these closes that were happening around that level and a peak that occurred around that level. So it's obviously retesting that again, which is, it's just great news. I mean, we could look back here and say, well, look what happened here. It didn't go through that high. Well, that's exactly why we would allow it a bit of room to move and let it run, because what occurred afterwards, it continued to fall. So the same sort of scenario could unfold. It could take out this outside bar, but we don't really care, because we're just going to let, you know, the short-term players, people who are wanting to take the highest risk, look to trade it right now and then give it the opportunity to run. Yeah,
it's really not about, you know, trying to tell the market what it's wanting to do next. It's listening. It's using your ears more than than anything.
Exactly. I mean, even though I say that, you know, in scenarios, sometimes the exact pattern doesn't unfold in the same way, it's that broader pattern. And if we come back to the chart and we look at this move here, it's, you know, that low there, once that September 2024 low was taken out, that was a huge warning sign. It's more about setting alarms for yourself, really. You know, when is it concerning? When do you go with it? And when is it going against you? That's, I guess, a good way to put it. And so it's like a seesaw effect. You've got to be thinking about which side of the seesaw you're on. You know, there's a long way to go if you're on the side that's coming down.
I mean, they're important points. And look, if you're asking all these questions right now, they're resonating with you, then please go and check the website out, because this is exactly the thing that, you know, getting an education helps answer. And I said, using your ears to listen to the market. So that makes me look like a, you know, I shouldn't say the word IDIOT. You use your eyes to listen to the market. But anyway, let's move on.
We knew what you meant, Phil.
You knew what I meant. All right, let's move on to the next stock. Dale, ELS is the next one. Is this one shaping up for some potential? I believe this one might be in the defence space as well.
Yeah, you're looking at these sorts of stocks, and obviously they're quite volatile stocks. And I mean, obviously Drone Shield, as Janine mentioned, was one of your hot stock tips a little while ago, and it shot the lights out, and people have that expectation of it happening again. I mean, my hot stock tip for tonight is one that I recommended a while ago, and it did the same thing. It shot the lights out as well, so everybody can hang around for that one. But let's go and have a look at this stock. It's called ELS. It's Elsight Limited, and you can see here that this stock has just gone absolutely vertical. And if we show how it rose from this January, start of this year, to the current close last night, you can see 1,606.9% over, sorry, this is monthly chart, sorry, I'm talking about January 2025, not January 2026, sorry. 12 months, it's made 1,600%. So people will be looking at this going, oh, geez, it's come down a little bit. If we look on the right-hand side, they can see it's fallen a little bit down through into sort of around that week ending the 20th of February. It came off a little bit and people go, wow, I'm going to get into this stock because it's now fallen, as you can see there, 31%. So they become cheap. And then obviously you get the buyers coming in. But look at the volume. It really hasn't gone up to where it was prior to that big peak. And this is this optimism that people have. What we see with people in the stock market is that they always way overly optimistic on what they're buying. People don't think they're going to lose money. And so what they're thinking is they think they're going to win big quite regularly. And what that does is help them make more mistakes because they're buying and selling on emotions. And what Janine was talking about and what you were talking about, Phil, is that we can't do that. And looking at this, I like this stock at the moment. It did come off. This is just looking at the weighting between buyers and sellers. And really what we do is chartist, and looking at charts is looking at supply and demand. You know, obviously the supply and demand of the stocks, not necessarily the company itself, and using tools around that to determine the strength, weakness, and direction of the stock. Once you understand that, trading is so easy and simple to do, and you can make a lot of money out of it. But let's have a quick look back at the chart again, and you can see here, as I said, a lot of indecision at the moment. Would I buy into this stock right now? Probably not. And the thing is, and the reason why I probably wouldn't buy this stock is because it has gone so vertical. Eventually, people just run out of money to get into that stock. But they also think, geez, you know, only back here, back in November, it was around, you know, under $2, and now it's around $5. Wow, that's really expensive. I'll get into it when it comes back a little bit. So it'll be interesting to see where it ends the week, because at the moment it opened up there at $4.71, rose right up to $5.30, and currently the close is $4.95. So if it closes down low on this bar, then people who bought in here might be a little bit disappointed, because you might see it come down. But I'm not saying it's not going to go up, and I'm not going to say it won't go to $6 or $7. It may. Right now, though, it's looking like there's some indecision there, and I probably wouldn't get into it, but I would look for some other signals to say, is it strong or is it weak? And then look at that and look at some buy signals around it and money manage around it to make sure I'm protecting my money.
Yeah, fantastic. All right, well, that wraps up our first round, and we've got some more amazing stocks coming shortly. But now time for our trending topic this week. Janine, take it away.
Unfortunately, more on war in the Middle East and the risk to supply routes has created an opportunity to dump gold and silver and slip into the next big opportunity in oil. Could this be the smarter buy right now, or is there still further upside for your favourite precious metal? We will answer those questions shortly. Before we look at the next big move for gold and oil, in February, gold and silver plummeted, reportedly in reaction to the appointment of the new US Federal Reserve Chairman, Kevin Walsh, a big warning for precious metals. Now, if markets believe central banks will keep rates higher for longer to fight inflation, that tends to strengthen the dollar, boost real yields, reduce gold and silver appeal, and can counterbalance the safe haven buying. We've seen a countermove and a serious rise in the US dollar. So let's take a look.
Real interesting what the dollar's doing.
It is interesting. So it's coming off that bottom. We've just seen this really important move off this month, this week actually. So it's actually made a really important move above 98. It's heading back towards the $100, which is where historically it wants to be, or just above that, more like probably 103, somewhere between 100 and 103. So currently, if that low holds, we're seeing the US dollar index pushing up to between 100 and 103. So that's sort of adding to the picture of what we're seeing with gold and silver and and oil, but it's early stages.
Yeah, you mentioned that, since they've appointed the new Fed chair, literally the dollar's reversed from falling.
Exactly.
So that's something to keep an eye on.
It's definitely something to keep an eye on. So a lot of people may not be familiar with this index, but you can use DXY. That's the one that you want to keep an eye on, as you can see there. So, and we've already seen the masses that were piling into gold. So the masses were lining up, weren't they? Remember the story of investors lining up at the mint? Euphoria occurs near tops. We know that. That's how bubbles form. And gold is not immune. We've seen historically massive peaks in gold. There was one, I think, at the end of the 70s or around that time. So let's take a look at the risks and opportunity in gold and oil, and we'll share our current view on Woodside. So I'll just quickly move to the chart there. You can see on the screen I've got the gold price. So the spot price for gold on the left-hand side, and we've had this euphoric run in gold. Now, what's really interesting to me is the potential for more upside. I'm still thinking that there is upside to around 6,000 for gold. However, are we near the top? And to really understand that and have a close look, we just need to see what gold's been doing. We need to look at where gold has been rising each time it actually has these breathers and then moves up again. We see these little runs. And we're seeing these little 40% increases off these lows. So could gold make the next move through that level? Well, it's in all likelihood, it could repeat the same thing through that $6,000 level. So that's really important to keep an eye on and just watch what, it's about probability at the moment until it tells you otherwise. And I think that's one of the things that really struck some people who came to us to learn, because it's not black and white. The stock market isn't black and white. You can use black and white rules to trade, but then whether it's a win on that trade or whether it goes the other way is more about whether it's all about the probability and whether everything's stacked up at the time. But, looking at gold again, if we go back to the chart there, we can see that it tends to consolidate for quite a while. So it has many months sideways, even sometimes 12 months or more, where it just goes, 6 months or more, where it just goes sideways and then all of a sudden takes off. Now, they're getting shorter. These sideways moves are getting shorter at the moment. So if gold takes off through that high, then I believe that that's going to be indicating closer to the top.
Yeah.
As I said before, when the masses go in to buy gold, we know it's getting close to that bubble. The war has the potential to accelerate it, but gold got sold off. Let's have a look at how far gold fell away. So we can see this move down here. It was a 20% fall, and it's recovered a decent amount of that, which shows that there is a lot of strength still in buying, and that sort of adds weight to why that high is more likely to be taken out at this point. But while we've got to be mindful of the potential for it to trade sideways, because it has done so in the past each time, if that low there gets taken out on the 20th of February 2026, so that the gold price can return back to trend, because obviously, we've seen the angle of this trend just change in the last couple, in that recovery. It's just accelerated away, but historically, gold will want to come back to some sort of angle of the trend. So for now, there's still upside to around that 6,000 mark, but is it short term? And that's really, I guess, the question for traders and investors is what's their time frame for putting more gold into their portfolios right now, given the run?
That's the most important thing for me. And you're only ever going to see it by looking at a chart. You can see how mature a trend is. You can see whether you need to flip the strategy to more of a short-term scalp versus a long-term hold. It's crucial. But I know you also had oil and Woodside to look at there as well, because really that's the question, isn't it? Do you jump into oil if you're looking to trade the oil futures, or maybe, obviously we know Woodside's really gone for a run, but is that a succinct play right now?
Yeah, and I think for people who are not familiar with how to trade oil, then it's Woodside, because you just look at the chart. If we go back there and you can see that we've overlaid the Woodside line, you can see that line graph there, and then the bar chart of the oil price, and it looks very similar. So when we're seeing that adherence to the overall movements that the oil price is making, it makes it much easier to be able to trade the underlying stock. So Woodside's taken off. It looks beautiful. We talked about that on last week's show. If you missed out on that, make sure you go and check out last week's show. And we can come back to this line of support, which I'll just lift up a little bit further. And we can see that that looks really strong for the oil price there. All it needs to do is take out that high and we know direction. So right now, direction's not confirmed, and it's important. We're seeing a base that's forming, but it's not a confirmation of the direction just yet. It's early days. A trend line will give you an idea as well as to whether it's more likely to go up and down, and that's about probability. And it's just starting to break through the angle there. And so it's looking really interesting. Any move back below this low, and like you alluded earlier, if it was over in a week or a couple of weeks or a month, would that then cause the oil price to reverse? Probably, but I don't know how quickly that would unwind. Yeah. Because of everything that's gone on. So I don't see it happening anytime soon, though. Yeah, because we're talking about a major choke point here. We're talking about real serious supply issues. That's one thing. But then what we haven't spoken about, and maybe I'll get your thoughts on this, Dale, while we're on it, is the cost and the effect it's going to have to the economy in terms of we all don't want inflation. A cut in supply in oil, if oil becomes more expensive, that only fuels inflation. And so at the end of the day, this might hurt, the Australians more than we would want. And then obviously, you're thinking about what the effect of that is. That just gives the RBA another bit of information or fuel to then go and raise rates even further. So, I mean, is this landscape also dangerous economically, especially in Australia with our cost of living that we have right now?
Oh, look, it is, oil has been quite low, I suppose, if you want to talk about it in that way, for quite some time around Australia, because obviously our fuel prices have been low, but war, obviously there's that supply chain issue that if Iraq blocks that strait and oil can't come out of there, then it's going to put the oil prices up. Now, we do make some of our own oil here, but obviously there's a lot of fuel, I think pretty much most of our petrol for our cars actually comes out of Singapore, I believe. Don't quote me on that one. But it is going to cause issues, and it will cause CPI to go up. Now, obviously, we're trying to get hold of that. But, as I was just chatting to, I was on Ticker TV a week or so ago, and I was saying the reason why CPI is high or going up is simply because of government spending. So if we can get that under control and the government stops spending and starts adjusting what it's doing, then we may see that counterbalance what happens with the oil price, at least short term. If the war is over in 4 weeks, as they say, then this is a little blip in the long-term history, because obviously, I was only thinking this morning, I think COVID was 6 years ago it started. And it's like, wow, I can't remember that. You know what I mean? Even though I remember it, but it's like, it seems like a long time ago, 6 years ago. So what's happening this month, if the war is over in 4 weeks or less, then we'll be forgetting about it pretty quickly.
All right. Now let's move on. Sorry, Janine, I know you had your hand up a second ago. You do want to add something?
Can I speak?
Yes, you sure can. I feel like I'm in school.
Look, just one more quick one. So we did talk about, what we're expecting for gold on the upside and the short-term risk to the downside. So is gold one that you should dump right now? The answer is no, not while the chart's recovering like that. Is Woodside a buy? Looks great. Is the oil price indicating it's going in the right direction? It's just the early stages of supporting that. Another big move would mean everybody would be getting on board. Yeah, fantastic. Great calls there. Something to keep in mind for sure. Now, if you want the skills to analyse stocks, just like you have seen tonight, visit our website, wealthwithin.com.au. But now let's get back to our topic and get into some more stocks. Janine, what have you got? All right, CBA may surprise people because this has been a bit of a dog recently, hasn't it? I mean, one of the brokers was calling for it to go to $100 at one stage, which we thought, that's poo-poo. Eventually, when the market pulls back, there's a big probability that, a lot of stocks will halve in value for sure. But right now, CBA is looking strong and it's just finding its support. So I think it's potentially setting up for another opportunity. I think it's very timely because this is definitely one that most people have in their portfolio. So you're right. There was always the question on CBA. It's too expensive.
but I want to buy it. I'm thinking long term, but maybe I shouldn't because it's so expensive. Then we get the pullback that we're talking about. It shot up so quickly. So now they're asking that same question. Do I buy at these levels? Do I wait? Do I potentially sell?
Well, look, I mean, if you were going to sell, there would have been plenty of opportunity to do that through that pullback, and you wouldn't have wanted to be in it when it was making this move down in November 2025. We thought there was a risk to the downside somewhere. I think it was about 130, 140. It didn't quite get down to that. That could show strength. But at the moment, it's still in limbo a little bit to a degree because we're just seeing that next move, which I talked about earlier. So what our students are looking for is they're looking for that counter move and then confirmation that it's going to keep going up. Now, CommBank had some bad press recently, so that hasn't gone in its favour, but it's actually recovering strongly, stronger than I expected from that.
Well, I think a lot of it, and it's not being spoken about too much, is it started last year during earnings season. We saw a lot of companies get rewarded for cost cutting through AI. Now, CBA has been on the forefront of that. We had WiseTech the other week slashing 2,000 jobs, going fully automated. CBA last year, raised we're going to slash jobs and go do automation. And the market has been, paying it off or respecting it and loving it. And so, we're in this dynamic now where companies are adding value by cutting costs through AI. I think that's the big, carrot or unknown. And really, like most technologies, the hype's there at the moment of what it can do and what value it can add. Well, we don't really know.
Well, I saw a report come out because I'm always looking if a broker makes a call and it's one of those outlandish calls, I'm thinking, what is it that you know?
Yeah.
And then I saw a report recently that said that some criminals had been taking false loans in banks, right?
Yes.
So then when that information came out, I thought, well, maybe that's what the situation was. And is that a storm in a teacup or does it go further? So I guess, only time will tell on that one. But at the moment, Commonwealth Bank looks pretty good.
Yeah, fantastic. All right, let's get to the next stock, Dale. Armour, I believe this is an ETF.
Yeah, it is an ETF, and obviously I don't particularly like ETFs, specifically index ETFs, but this one looks really good. So let's go and have a look at it on the chart. I thought Janine's comments on Commonwealth Bank are really, really good, and I actually like it at the moment. And it is interesting because I was only doing some research on it this morning, finalising up a presentation I'm doing in New Zealand later on in the month. I'm been invited to present over there, and very interesting Commonwealth Bank because it actually has regular times where it has lows and highs, and it does. I calculated this morning, we've had 8 out of the last 9 times it's hit it smack on, and a month or so ago, January, it hit it again. So I think it's bullish for a little while. So, but anyway, let's move on to the ETF, which is a BetaShares Global Defence ETF, and its stock ticker code is AR for Robert M and R again. And as you can see there, it's very bullish actually since October 2024, where it started at a low of $15.20. It's now up around $27. So it's a nice little growth ETF that we're seeing here. And these sorts of ETFs I don't mind because they are specific to a potential area or an area of interest for somebody, because trying to understand defence stocks could be quite hard for the average individual. And so this has risen 80% in that particular time between that October 2024 low and obviously currently, which is just over 12 months, not too bad, about 14 months, and doing really well at 79%. Right now, looking at that weekly chart, it's just trends. Look at the beautiful trend that you're seeing here. It came right back down into the end of last year. At the start of December, it fell down to $24, and it's taking off at the moment. So I do like it at the moment. It is I'd probably wait for it to get through that high before I got into it. The high there, where it's all-time high of $29.35, which if I use this little tool is not too far away. You can see there it's about just under 8% to that high. And a lot of people might say, well, why do we want to leave that 8% on the table? Why should we just get into it now if we like the stock? And everything we talk about here, and I know I think it was Charlie Munger, Warren Buffett's offsite or his trusted companion, he basically said, If you don't have the knowledge and education, you're like a one-headed man in an ass-kicking contest, And why we wait for confirmation is because we understand that some of these all-time highs or previous highs will create resistance, and lows will create support, and other highs will create and different shapes that the market makes and different moves that it makes. We see these things. And so as experts are looking at these charts, we'd just rather be a little bit more reserved until we get confirmation of a move rather than guess it's probably there. So I'm happy to give away 7 or 8% to know that the stock is going up and it's going to continue to go up, rather than if it hit that point and then only turn around and then I'm only making 1 or 2%, which so many people tend to do. But right now, this stock looks great.
Fantastic. All right, let's move on to the next one, Janine. Bank of Queensland.
All right. Yeah, Bank of Queensland. Dale was talking about second-tier banks earlier and saying that he likes the look of those. And look, it's interesting because this stock has been trawling along bottoms. And I think it's important to look at the big picture of Bank of Queensland because it's been so different to what our big banks have done. And it used to be that you could say that our second-tier banks might lead the way and then the big banks follow. But in more recent times, it hasn't been the case, that these banks have actually seriously lagged what's going on in the banking sector. So are we now seeing that move up? I mean, we've seen a number of tests of a certain level here, and I'll just put a line across these lows here because we've seen the same test across here, and it's historically a massive level for Bank of Queensland. So these are the sort of opportunities that you've got to look for, ones that when you're feeling a bit of fear. Remember, greed and fear, that whenever there's fear, there's usually greed by the people who are more in the know, watching what's going on. Yeah. So right now, it's testing some short-term resistance. We can see this on the shorter-term chart. If we then go to the weekly chart, we can see that that's unfolding. Is the worst news over? Possibly. I mean, that fall was a decent move. We often look for the that's the wrong tool. I just grabbed the right one. And we often look for these sorts of falls to see, well, how far has it actually gone? And right down here at around 20%. So that's a decent move for a bank to see that pullback. And we can see in the short term, it's just meeting a bit of resistance, but looks like it could be setting up really nicely there. You can see that low. It's only say 3 weeks down at the moment, but if it came below this low here, obviously a different scenario would unfold because that would mean this whole level of support's been weakened and potentially it's going to come back and take out that low. But right now I'm not seeing that, and I think it looks nice.
Yeah, it's like people throw that term around once in a generation type opportunity, but it's at those levels, this one.
Exactly. Yeah. It is. So look, we could see some really good moves out of Bank of Queensland in the not too distant future. All
right, one to watch, Dale. Next one is BlueScope Steel.
Yeah, I like this stock. I mean, obviously we've seen stocks like BHP, go through the roof and do really well. Rio's doing really well. Fortescue's off a bit, and they're obviously in the materials sector. But BlueScope used to be owned by BHP. It got split off several years ago, but it is looking really nice at the moment. So let's have a look at the chart. If you look at the monthly chart, you can see this beautiful pattern that it's moved up from since about 2012, where it was $1.47, now sitting at $28, and it just has these beautiful regular moves, which is really what I was talking about with Commonwealth Bank. And I know, the market very much is, or profiting from the stock market is about, I suppose a saying on the stock market is, the stock market is a transference of wealth from the impatient to the patient. And when you look at stocks like this and Commonwealth Bank and some of the other ones we're looking at, the more patient you are, the more money that you will make because they're making these regular moves. Now, on the chart, you can see here how more recently, back in December, it broke through that high, that long-term high back from August 2021 at 26.15. And it's just gone vertical, but it just has come back more recently. You can see there that February it did drop away. So far in March, again, it's only 1 day here at the moment in March, it's dropped away. But looking at that weekly chart through here, I think it's probably going to hit this hit its head on these prior peaks and find some support through there around that $25, $26 mark. And if it does that and start to turn around, I think this is one you're going to get into. And again, that's why I said you've got to be patient. And because I see too many investors and people wanting to trade the stock market, and they see a stock like this and they hear me or you, Phil, or Janine say, I like this stock if it does this, but then they don't hear the if bit. if it does this or if it does X or does Y, then I think it'll be a good one, and it should go to these sorts of levels. People just say, oh, no, Dale said it's really good. He likes it. I'll just buy it. And that's not what we're talking about here. It's about being patient, waiting for it. And if this stock does find some support and does find some support on those prior peaks through here and starts to move up again, this could be a really, really excellent time to get into a great stock at a really nice time and get ready for that next run up. And it's not surprising that this big move through here in January caused this bit of a pullback through here. So again, just be patient, stick it on your watch list. Dale says if it does prove that it's going to stop falling away and start to move up again, I have no problem with you getting into this one in another month or 2 months when it does that.
Yeah, I'm with you, mate. That looks amazing. Watch that $26 like a hawk, really, if it holds. But we've got one more, Janine, Santos.
Yeah, they're all quite different, aren't they, tonight? There's sort of not a rhyme, except for some of the defence stocks. But then we know that oil's been doing well, so I thought oil and gas, let's get Santos in there as well. So we can see on the chart there, we've been talking about this one for ages, but eventually it will take off. We just need to wait for that move to happen, but it's gapped up more recently because of the recent news. We know that the offer price was up around that I think it was higher than $8, the original offer, but it only ever got to around this level. I would be just watching this to see if it recovers, because we've still got the history here hanging over its head. It's a very strong level through here, and so it really needs to break that resistance. But I feel like I'm a bit of a broken record on Santos, and we all have been to an extent. So, but eventually we'd expect to see Santos take off. And I think one thing to bear in mind, Phil, is that if people are looking for the yardstick, we know that 20th of February 2026, where it reversed and turned around strongly, that now is a really important level on the stock. And I guess it's experience and knowledge that helps you get to the point where you know, well, where am I going to set my stop loss? Where, is that okay? Or can I still get into a stock if it takes off? It takes time to develop those skills, because it's not just the skills, it's the knowledge first, but then the skills, then the experience, and that is what eventually leads to the success of that individual when they're putting their whole plan together. Yeah,
but it's important what you're saying, because I know you said we've looked at this stock before, but this is part of the process of doing it, to that professional grade. We looked at BlueScope still a second ago. How many times would, looking at that, if you were in that sideways move, thinking, I'm getting a bit bored, I want to get out, it's doing nothing, the stock's not moving, and then all of a sudden in 1 week or in 1 month you get the pop and the break. Now, without patience, you miss all of that and you completely ruin the trade. Now, you look at Santos today, it's in a similar boat. Yes, it's sideways, not doing much, but at some point something will happen, and if you're late to that move, well, you've missed the opportunity. Now you're falling into that FOMO, chasing the market, and no good thing ever happens chasing a trade. So I think it's more important than what you're mentioning in terms of this is the process. You've got to watch stocks week in, week out, month in, month out. Keep monitoring, because 1 week's information can change everything for you.
Absolutely. And I think, the point Dale made before was a really good one, that people who are educated and they've been trained in the stock market, they're not just going to listen to, Dale said that it could come back to that line and therefore they're just going to sit there and wait, and if it did come back, they're going to buy it. That's not what Dale's talking about. It's just all adding more weight of evidence to whether or not to buy when the signal occurs to do so. And that's the experience in it.
Yeah, fantastic. Now, Dale, I want to get your thoughts here as well on this point we're covering.
Yeah, and the reason why I do want to actually add some comments, because a lot of, like I said, people tend not to wait very much. And one of the biggest things our students tell me when I'm dealing with them is like, you taught me patience. My wife's been trying to get me to be patient for years, and you've taught me how to do that in the stock market. And it really is the money will come if you set yourself up and wait for it. But then the question is, well, why don't people wait? And why aren't they patient on the stock market? They see a move happen on a stock over a few days or a week, like this whole move of BlueScope Steel, where it took off like a rocket, and other stocks we've looked at tonight. And people go, wow. And what we find is the most amount of volume comes in from halfway up the run to the top of the run, because people are they got that FOMO, fear of missing out. So their emotions are saying, I need to get into this stock. But good traders will see what's happening and understand what's going on, and then they're patient, like being patient, watching BlueScope come on down in price, find some support and start to move up. But again, people aren't patient because they don't know why they need to be patient. They often don't understand what risks they're taking when they are actually getting into a trade. They're not understanding how the strength of that stock, how is the strength in terms of selling strength, is it buying strength, and how strong is that selling strength and how strong is that buying strength, and what direction is it going to go, and what's that white space on the right-hand side of the chart? How is it going to unfold in that? And when you have the confidence in knowing how it's going to unfold, then you get a lot of patience. You go, well, I can wait for this because it's got to do X, Y, and Z with a high degree of probability, not absolutes. And this is where a lot of people, you see the comments on our YouTube channel from people going, well, you said about this stock was going to do this, and you said, no, I should buy that or I should sell that, and it didn't do that. All we talk about is probabilities and not absolutes. We don't say absolutely this stock is going up or absolutely it's going down. We just say, when we're talking about a stock, we like it, the probability suggests that we'll get it right most of the time. And we do get it right most of the time, but not 100% of the time. But right now, as I said before, I do like BlueScope Steel. And Santos, I think Santos looks a great stock, and I do agree with what Janine was talking about, but there's a little bit of indecision at the moment. So I'd just be sitting back and waiting on that. But again, if you're somebody who's impatient and jumping in and out of the stock market, I can pretty much guess you're going to get inconsistent returns. You're going to be worrying about things like what's going on with the war at the moment or other announcements of how that's going to affect your portfolio. And that's not a really nice place to be.
Yeah, fantastic. All right, now hopefully we've shed some light on some of your favourite stocks in terms of whether it is time to be buying or selling or seeing what those opportunities are right now. But before we move on, just quickly, Dale and Janine, I'll start with you, Dale, first. Out of those 10, what's your favourite?
BlueScope.
Easy choice.
Easy. Easy choice.
Cool.
Easy.
All right, I have to choose something different.
Janine.
So I'm going to go two. I'm going to have Bank of Queensland, and I want Drone Shield.
All right, there you go.
Fair.
Nice. Janine can have two. It's how it goes around here. So, but moving on shortly, we're going to get into our hot stock tip, which was Dale's choice. So stick around for that. That's going to be exciting. But first, let's answer your questions. Now, John writes, I work as a video editor and I've recently come across a piece of AI software that has a lot of potential and is operating as an Australian business. It is stock code IOV. Could you please look at the chart and let me know if it is early enough to get in and make some good money? I don't know much about its fundamentals, but it is a very promising business in this upcoming AI space. Now, this one, I'm going to get you to have a look at it, Janine, IOV.
Okay.
It's got something to do with AI and videos and packaging videos. I might not be 100% in what I'm saying, but I know it's around that space.
So it's in the right area. And the market obviously has responded to that because just look at the chart.
Oh, Jesus Christ.
You can see that it's shot up like a rocket and gapped right up. Now, I'd really need, he's saying he hasn't understood the fundamentals yet. Well, to me, that's the first thing now, given that the move that we've seen on this stock is to find out why did it move like that, what's going on with the company, what its prospects. But second to that, you can't buy a stock once it's done this. It's just not possible to buy it unless you're taking extremely high risk. I mean, where's your stop loss going to be for a start? So, you're looking at it there, to fill that, it would be, it's more than 90. It'd have to come back to almost 100% of its rise, which it's not to say. I've seen stocks make those sort of moves and then wipe out everything that they've made after that announcement came out. So, and that's just opportunists putting out the spin and then collecting, it's just a sad fact.
And that's the reality when you look at a chart like that. I mean, if we go back to that chart and have a look, it's, when you're talking about moves driven by speculation and sentiment or moves driven by real trend and real buyer and seller activity.
Is it a takeover? I mean, what was it?
Yeah, that purely looks like a speculative type move, and that could very easily go all the way back down. So do you want to play in this area of the market? What do you know?
Yeah, well, I mean, if he's asking the question, he's probably not someone who's experienced or has the knowledge yet anyway. I mean, it could be something that he gets into once he's got that experience, because may then have the confidence to wait for the right strategy on it. But right now, is this just sort of one of those ones that you sort of, lick your finger and hold it up in the wind to see which way the wind's blowing? That's the way I look at it.
Yeah, okay.
Or tossing a coin.
Yeah. All right, let's get Dale's thoughts on this one. Dale, what are you seeing with this? I mean, is this the right place someone should be looking, especially given we've got so many AI and tech companies that are way more liquid? Is there a play in this one?
Look, yeah, it depends on what type of person you are. It really does, because obviously the strategy has to come first, not the stock. And a lot of people put stocks in their portfolio without the strategy. So if you're somebody who's more of a buy and hold investor, not a hope in how you put this into your portfolio, because it's going to be volatile. That's what the stock's going to be. But if you're somebody who, has a bit of nous around the marketplace and wants to do the research behind it, I mean, this stock used to be called Lineus Technologies. It's a Melbourne-based company, and they're actually in our studios that you're sitting in right now, yesterday, recording. And one of the CEOs, the actual inventor of it, a gentleman called Finbar O'Hanlon. I've had several coffees with him, so he's a lovely bloke. So if he's a part of this and invented it, it's a good thing, but it doesn't mean we should be buying it right now, because you want to take the least amount of risk at any one time of your money. So if you're somebody who's a trader and you've got good skills, then I don't have a problem with this sort of stock. But right now, like most floats, when as companies take off like a rocket, they're going to come back again. So I think it's probably got further to go down. But I do think it's depending on our viewer who's sent the question in, what level of experience and knowledge they have, is whether they should buy it. Again, if there's somebody who's quite knowledgeable like you, me, Janine, and a lot of our graduates, then you know what to do.
Yeah, well, they're definitely one to put on the watch list and keep a nice monitoring on. But let's move on to Paul's email, who is next. You guys are strong advocates of technical analysis, but how do you approach microcap stocks that are driven by potential major discoveries? I love to follow price action, but in this instance, can technical analysis still give you a real edge, or does one announcement risk completely invalidating the chart? Now, I'll get your thoughts on this, Dale, because it's a very interesting question, what he's saying. And I mean, just my 2 cents on it is, doesn't matter if it's a microcap or a large company or an index or a commodity or a currency, price action and charting tells you the sentiment of the market, the buyer and seller relationship. That is always important if you want to buy right and sell right. But I shouldn't be answering this question. What do you think?
Look, I agree with you. Technical analysis works, even on the first day a stock floats. As soon as you've got free trade of anything, you can start analysing all of that. But my question is, why micro-cap stocks? And this is the thing I find a lot of people do. They go for the bottom end of the market in those micro-cap stocks, hoping to do 10x profits, but then the best traders are the ones that trade consistently well all the time. We know for a fact, the statistics are that when you're trading at the small end of the market, like the stock that we talked about before, Ion Video, when you're trading at that level, you're going to get it wrong most of the time. And even simply because you see those announcements happening, FDA approvals pending, there's a lot of emotions running that people get into it. They get FOMO. It affects the stock a hell of a lot. So you get the fear and the panic happening all of the time in that area. So the chances or the probabilities that you're going to get a micro-cap stock correct on a consistent basis are much lower than getting, top 50, top 100 stock correct. And you make far more money by getting more trades correct and running those trades and being patient for those trades than you ever will out of trading micro-cap stocks. That said, I do like micro-cap stocks, and I go to the micro-cap conference every single year, and they're the ones that I might speculate on a little bit, like, as I said, like Ion. You might put a bit of, your lunch money on it, so to speak, for coining a phrase. And if it goes really, really well, then you made some money. But I wouldn't treat them as a serious investment vehicle for myself, or a serious cash-making vehicle for myself if I wanted to trade for cash flow.
Yeah, fantastic. And I think the main point from there is don't disregard the technical analysis, because it always is giving you information. You just know how to understand it. But that's a great email. Thank you very much. We do have Charles now, who is next, and writes, with everything going on in the world right now and the fact that war is good for the stock market, what Aussie sectors do you see rising based off Trump's recent actions? Has anything already gone up, and will said rise be long term, or is it just a brief bump based on news? Now, I guess we covered a bit of this already.
Yeah, we've covered it, haven't we?
Yeah.
Energy is a really good one. And you'd look at defence stocks as another area. I still think that financials do well out of this regardless. So that's an area, but, you just, like we said before, you just pick and choose the stocks in the financial space and then look for the next round of pullbacks when they occur. So we've got an election year, so we could see a pullback. We normally do before the middle of the year. So therefore, if we do have, I'm pretty sure it's the end of this year.
I think I was speaking to Rod, who comes into our studio often, and he said something around 200 days. Mm-hmm.
Yeah.
That's within
close.
This year, isn't it?
Do your maths.
How good's my maths? All right.
On that note.
Yeah, on that note, let's move on. But now time for our hot stock tip for the week. Dale, what is it?
I want you to calculate 200 days. That's what I want you to do. Something like that. Look, I'll get into something serious, which is the hot stock tip. And if you look at the chart, you'll actually see it's A2 milk. And a lot of people for quite some time were saying, why were you interested in A2 milk? Because I know I remember, through here I'm saying I'm interested in A2 milk, but it didn't have great fundamentals. And again, that's why we use technicals, because you'll see stocks move when the fundamentals are still bad, because if people are buying, they're buying for the white space on the right-hand side of the chart. So they're looking for potential in that stock. And so you'll start seeing, the bad news is happening. So we have that whole, crash situation, despair, bad fundamentals happening. But eventually the bad news just stops and then there's no news. And then you start getting dribbles of good news and you get this renewed confidence. So if we look at this stock, and here's the bottom through here from November 2023, it rose 99%. Here's the next bottom, and it rose 91% or 92%. Here's the next bottom that we're seeing. It rose 37.26%. But a lot of people were saying, why are you interested in this stock, Dale, during this period of time? Simply because it had bad fundamentals, but the fundamentals are changing. Its last report, which happened only about 2 weeks ago, its first half yearly results, but revenue's up 18.8% in this financial year. It's driven from strong performance across all different sectors and products, from China and other segments, revenue up 20%. Australia, New Zealand revenue up 8.6%, USA revenue up 29%. So there's some really good fundamentals coming into this stock right now, but the runs have happened through here. The other interesting thing from a fundamental point of view is that Ausbil Investment Management have been buying into this stock over the last few weeks, and they're now, if you look at the ASX announcements, you'll see that there's a significant shareholder announcement. They're now up to 5% holding in this stock. So there's some reason why they're buying this stock. Why do I like it? I like it because it's definitely in a bull run. It's absolutely positively trending up, but it's had some resistance through here. And I want to explain these lines that you're seeing through here. This big long line is its momentum line. So generally when a stock gets above its momentum line, it'll come back to it. And you can see here how it found support and resistance around here, went up, came back to it, went up, came back to it, then took off on this big long run, which is where I was saying to people, buy this stock. And it was one of my hot stock tips way back then. Came right back to this line again, and not once on any month did it close below it until right through here, which is December 2021. It kept falling away right through to here is its major low there in November 2023. But here, went straight back up to it, hit it, came back, came up, came back, came up, hit it again, didn't close above it, came down again. And see all these opens and closes right through here. If you can see all that, they're all just above the line. They're all very, very close together. It went down again, and then the opens and closes are very close here. Now, the short-term momentum is still bullish there on this stock. So again, I still really do like this stock, but I'm going to put a couple of other things on here now just to show you some other little bits and pieces that we've done here. And I'll just put them on and click the last one. So if we look here, that first run was, it was huge. It was, you can see there, 304%. It fell 81.66% down to this low through there. And then what we're seeing since then is it's done 169%. And I don't know about you, but I think I'd be pretty happy with 169% from November 2023. In a couple of years, you've made 169% plus dividends. Now, the last thing I want to show you is some resistance levels, and I'll just expand that out there. You can see that prior low way back there in October 2018. It struggled to get through it and stay above it all the way through here. Did that, came back, found some support on it, and now it's starting to move up. So I do like this stock at this particular time. And it has broken that previous high of $9.78. It briefly did that at the last bit of February. Currently, this is just the first day here in March. So I like this stock. And this is just, I've done all of this on the monthly bar chart, and I'd be happy to trade this stock just on the monthly bar chart because I think it's got a long way to go before it gets back up to its previous all-time high there of $20.05. It basically has to double in price to get back up to there. And I'll show you what I mean. From the current price to its all-time high, there's 105% rise that it needs to make, and there's a lot of blue space there. So if you understand how it's going to unfold over the next 12 months-ish through here, I think you can do really well out of this stock. So hopefully this hot stock tip, again, on the same stock that I did a few years ago, hopefully it does as well as what it did the last time, but I'm not going to guarantee that. But right now, I do really like this stock.
Fantastic. If you want more from us, check out our video, 8 ASX small caps ready to rise, buy before they boom.